Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me, Snehi Shah. And in the next half an hour, we'll take you through how the markets shaped up today. So let's get started then. It was a very range-bound session as far as the market is concerned, even though we had that big announcement of MPC rate cut of 25 basis points. That was largely penciled in by the market, and it was the commentary though, a rather dovish stance that was changed from neutral to accommodative. But even that, did not have much of an impact on the market. We remained sideways today throughout the market. In fact, on the Nifty, we closed on 22,420 levels. We closed down 0.5%. The Nifty Bank also traded with cuts of 0.4%. So very flat moves coming in there, very range-bound move coming in the market. As far as the sectors are also concerned, barring Nifty, FMCG, the defensives that were charging from the front, a couple of reasons there, but the rest of the pack was in the red. Now, FMCG was doing well on the back of the fact that we have come out with the monsoon prediction for good monsoon that's in sight. Also, with the liquidity infusion, into the system and RBI's dovish stance, so the consumption pack is likely to pick up, and therefore the FMCG pack was doing pretty well for itself. Godrej consumers, Nestle was up 3%, Britannia, Imami, Colgate-Palmolive, all of them trading upwards of 2.5% in trade. Nifty PSU Bank really took a hit today. In fact, Nifty PSU Bank, that has really held the fort till now, saw a reversal today. That saw a bit of selling pressure coming in. Indian Bank, Central Bank, SBI, Union Bank, all traded with cuts of 3% and thereabouts. Nifty IT was also in focus today because on the back of a bearish note coming out from Jefferies, which cut the target price for a lot of IT companies. On the back of that, the IT pack was in focus today. Wipro, Persistent, Tech M, all traded with cuts of 4%. Nifty Pharma, again continued its decline on the back of what Trump said, that the tariffs will also come onto pharma as well. The pharma was also reeling under selling pressure with cuts of almost 2% in trade. Finally, besides the rate cut, the RBI also came out with the clarification on the gold loan regulation. Well, while they said that earlier on we had a news break that said that there could be a stricter norms and regulation as far as gold loan disbursements is concerned, but during the address, the RBI chief said that no such thing was said, and that is not likely to happen. And on the back of that, the entire gold loan pack was also in focus today. It saw a sharp cut of 10%, almost like with Manappuram Finance, Muthoot Finance, Chola, all of them were trading with cuts. IIFL were trading with cuts, and suddenly they all recovered. They didn't recover to that extent, but recovered nonetheless. So largely that's how it was shaping up. Snehi, what were the other headlines that made news?
Well, you've summed it up mostly, but just to talk about how the market move has been today, we've ended just below the 22,400 mark. So 22,399 is where we've ended. So that's a slight bit of a dampener coming in terms of psychological levels when it comes to the market. A 0.6% cut is what we have seen when it comes to the Nifty 50. Other than everything Ankita has mentioned, let's just talk about some stocks that were in focus today, the likes of ITI on the back of the work commencement for the BharatNet 3 project. So ITI was a stock that was holding up pretty firmly amid a market that was largely very range-bound today. Vedanta from sources to ET. Economic Times, we understand that now they're considering trimming their proposed demerger to 4 units instead of 6 and 5 earlier. Pharma was down and out. One stock that was doing very well today was Indigo on the back of the news flow, the development coming in the world of Brent crude, that WTI has slipped below the $60 per barrel mark right now. So that's the lowest since Feb 2021. And just in April so far, 9 days of April, that counter has been down 19%. So that's crude and oil, and on the back of that, Indigo, that benefits largely from the fuel prices going down, was up in a way in today's trading session. And the likes of HPCL, BPCL or IOC, these were also surprisingly doing pretty well in today's trade. But on that note, let's move on and take a look at what we can expect from Friday's trading session, given that tomorrow is a market holiday on account of Mahavir Jayanti. But nonetheless, we have action coming in tomorrow, because while on Friday we have Amphi and SIP numbers coming in, tomorrow is when we actually kickstart the quarter for FY25 earnings season with TCS, IT bellwether TCS coming out with its quarter four numbers. So all eyes are going to be on that as well, and then we can establish what we can expect to see when it comes to Nifty levels on Friday. And to do that, let's welcome on board Amar Singh, the Senior Vice President of Research at Angel One. Amar, thanks so much for joining us on the show, and give us your view on just that. Despite the kind of momentum that we've seen built overnight when it comes to the US and China, and the kind of tariff war that's going on internally, you also have Trump's announcement on pharma coming in, crude prices have crashed, a lot has been happening, but we seem to be largely shielded and resilient when it comes to global market moves, because we have not cracked as much. Today also 0.5% cut is what we have seen. Do you believe that we have bottomed out in terms of the correction that we have seen recently, and the worst is behind us, and Friday we can expect to see some better moves coming in?
Yeah, very good evening, and thank you for having me on the show. So, yeah, definitely it's a sea of turbulence and a sea of red across global markets, and primarily you can definitely pinpoint it to one person, the US President Donald Trump, who's very clear on the tariffs issue, and I don't see him budging. There would be negotiations, hard negotiations definitely happening with all major countries. So how that works out, because what he's actually trying to do, a couple of things. One is that he wants to re-establish US as a manufacturing base. That's one of the major agenda also that would lead to job creation. So he's looking at it from that perspective. While at the same time, he wants to see how there can be a level playing field across countries. As far as we are concerned, we definitely have the advantage that we are not as big a contributor to the US exports as compared to China, which is multifold of us. So there we have an advantage, though we are a surplus of close to $35-36 billion with the US. So somewhere or the other, and since we are a large economy, I don't think we will be that greatly impacted as compared to many of the other major countries which have significant hundreds of billions of dollars of export to the US. So they are definitely getting impacted. As far as the tariffs kick in have started from today itself. So we'll have to wait and watch. I think that's the reason why markets are correcting. And also there are many experts which have come in the US and who've talked about that US might get into a recession because of this. That fear is definitely lingering. That's the reason we are seeing this sell-off across markets. Our markets seem to be finding some support, you rightly said. So I would say still it's early days, but somewhere around 21,800, 22,000, that's a very crucial and support zone for the markets. And till the time we don't take out that level, I would say there is some consolation there. But for any significant trend change, Nifty would need to sustain over the 23,000, 23,200 levels on a consistent basis. Having said that, we see that across sectors, there's impact now. Pharma is a sector which is now very closely watching the developments happening. So, but some stocks which have performed, or some sectors which have done quite well, is FMCG is definitely one of them. As far as on Friday is concerned, as far as the levels are concerned, I would say for Nifty, crucial support zone is somewhere around the 22,100 to 200 zone, upside resistance around 22,500 to 600 zone. That's a zone of resistance. Higher levels will be sold into. So it's more of a trading play that's going to be in the markets. One shouldn't really expect a V-shaped recovery. One, secondly, higher levels will be sold into, higher levels shorts will be created, and the market could be in for consolidation until unless we witness or something you can say a bolt from the blue, something which captures the markets unawares, happens of that nature. But more or less markets are digesting. But I would say this quarter is going to be very important as to how this plays out. So at least April to start with is very crucial.
Right, Amar, as you rightly pointed out, this quarter is going to be very crucial as far as the earnings are concerned, because that will perhaps give some direction to the market. But with this market, like you mentioned, it's a trading market, and one should not expect a V-shaped recovery. But for the trades, then any buy calls coming in, any long positions that you are proposing?
Yeah, I've talked about it that the FMCG stocks are looking attractive at the current levels. I would say we've seen then correct significantly from the likes of Colgate Palmolive. And what we are seeing is that the volumes have been significantly higher over the last 15 to 20 trading sessions. And the stock has moved up higher today also, and the last few days it's been moving up. So this is one stock one can look at buying from a short-term to medium-term perspective with an upside target of 2665 and a stop loss below the 2400 level. So that's one stock from the FMCG, because FMCG, if I look at the Nifty FMCG index, that also it clearly seems to have bottomed out. So sustaining above these levels, it could trade higher. And the second stock is from the OMC pack. We are seeing crude oil prices crack significantly, trading at multi-year lows. So HPCL is one stock one can keep a close watch on. This is one stock which has, I would say, remained stubborn despite the market correction. Today it has closed again in the positive territory, up by almost 2.5 to 3%. Overall, if I look at the trend, the intermediate term trend is also strong and positive. Short term is positive, long term is flattish. So this is one stock one can look at buying at the current levels for a target of 417 on the upside with a stop loss of 339.
It's the likes of HPCL as well as Colgate that's looking attractive on the charts right now to Amar. Amar, thanks so much for joining us with your market view and your stock-specific recommendations. On that note, we'll let you go. Well, let's keep it going with word coming in from experts, and let's go across and listen into Nilesh Shah, because he spoke to us earlier in the day and he believes that he's the MD and CEO of Envision Capital, and he sees a lot of FPIs coming into India along with some fresh inflows very soon. Let's go across and listen in.
I actually believe that, over the next few years, you're really going to see a lot of, domestic money, of course, has been coming in, but I also see a lot of foreign portfolio investors coming into India. India could actually end up being a mainstream allocation. So apart from essentially earnings growth and strong fundamentals for the Indian economy, I also see a new round of liquidity flowing into Indian markets down the lines.
On then, let's move on to the derivative diary and how the derivative diary is shaping up for the expiry on 17th of April. Now, let's look at the Nifty first. There's a short build-up that's happening on Nifty, which shows a bit of a bearish trend creeping in as far as Nifty is concerned. Nifty, Bank Nifty also, there's a short build-up which shows a rather bearish trend in the Bank Nifty as well. Now, remember, up until now, there was some bit of positivity in the banking pack, but today also we saw a bit of a bearishness in the banking pack as well as the PSU pack that was leading the charge from the front. But let's look at the active calls then. The first call writing is happening at 22,500 and the second call writing is happening on the levels of 22,600 with no resistance level over here. We don't even have a support level over here as far as active puts are concerned. Put buying is happening at 22,400 and the next level for to watch out for is 22,300 is where the next put buying is happening. So that's how largely the derivative diary looks like.
Okay, well, that's what the derivative diary is shaping up to be like, especially after the expiry that we've seen today. Remember, markets closed tomorrow on account of Mahavir Jayanti, on the back of which the expiry was today in the market. But let's talk about the big story of the day, and that's the Reserve Bank of India in its monetary policy meeting has unanimously decided to cut the key repo rate by 25 bips to 6%. Additionally, the adjusted standing deposit facility rate also now stands at 5.75%, and the adjusted marginal standing facility, which is your MSF, is at 6.25%. Now, RBI Governor Sanjay Malhotra said that inflation remains below the target and is supported by a considerable decline in food prices. Drawing focus to some key estimates then, they have projected retail inflation for FY25-26 at 4%, with inflation for the first quarter of FY26 expected at 3.6%. Additionally, let's also talk about the real GDP for full year for FY26 that is pegged at 6.5%. Remember, that's 20 bips lower than what was predicted in the February meeting that we had on 7th of February. That was predicted at 6.7%. This is now announced as 6.5%. So the 20 bips cut coming in our growth outlook by the GDP, by the RBI, pardon me. The RBI Governor Sanjay Malhotra also addressed the impact of Trump's reciprocal tariffs on the Indian economy. He said that United States trade policy will weigh on net exports. He also added that there is scope for further softening of crude oil prices. Let's go across and listen into a little bit of a snippet of what he had to say earlier in the day.
uncertainty in itself dampens growth by affecting investment and spending decisions both of businesses and households. Second, the dent on global growth due to trade frictions will also impede domestic growth. Third, higher tariffs shall have a negative impact on net exports. There are, however, I may say, several known unknowns. The impact of relative tariffs, our relative tariffs vis-a-vis some of the other countries are quite low. These make the quantification of the adverse impact on growth difficult. The risks to inflation, on the other hand, are two-sided. On the upside, uncertainties may lead to a possible currency pressure and therefore imported inflation. On the downside, slowdown in global growth could entail further softening in commodity and crude oil prices.
And well, additionally, Sanjay Malhotra also spoke about the gold loans provided by both banks and NBFCs, and he said that while tightening the norms is not on the cards, the RBI will look at the issue comprehensive guidelines on the provisional norms for such loans. On the back of this, several counters were under pressure today. My colleague Varun is joining in with the details of that. Over to you, Varun.
You have heard about what Mr. Governor said during the RBI press conference at 10 a.m. Regarding the gold loans, but after that at around 12 p.m. RBI Governor actually clarified that he never said that the tightening of norms would be done against gold loan, and he is not going to do that. That's not on his mind. But yes, that has impacted the gold loan companies across, because if you see, after the initial press conference, there was a sharp reaction on especially Muthoot Finance. If you look, the stock was once down around 10%. Manappuram Finance was down around 3%, 4%. IFL, CSB Bank, these are some of the companies which have taken a hit after this initial, press conference. Now, why is this? Because Muthoot was one of the stocks which was much beaten down, because the company has the highest AUM in terms of gold loan. Overall AUM, if you look, this quarter only, it has crossed 1 lakh crore, and out of the total AUM, around 80-85% of the AUM comes from gold loan. If you look at Manappuram, the company has around 24,500 crores of the total gold loan AUM, and out of the total AUM, 55% comes from gold loan. IFL, if you look, in a few quarters before, the company was banned from gold loan, but again the ban was lifted, and in previous quarter we have seen on a quarter-on-quarter basis the gold loan AUM saw a good growth, around 39%, and the overall gold loan AUM was around 15,000 crores. And also for a bank like CSB Bank, the overall gold loan portfolio is very big. Out of the total advances, around 42% of the advances were for the gold loans. And if you see, earlier also RBI has continuously spoken about gold loan tightening, and there are several actions that were taken by RBI. So that's the reason when the initial press conference was done, after that we saw a sharp reaction on some of the gold loan companies, especially Muthoot Finance. But then after clarification, we are seeing that the stocks have actually bottomed out and shown some reversal. But yes, there are doubts, and that's the reason we are seeing majority of the stocks still trading in red.
Okay, Varun, thanks for taking us through that impact of the statement and the clarification later on gold loan financiers, the likes of Manappuram and Muthoot. But let's move on and talk about the reason why FMCG was your only gaining sector in today's trading session, and that too by leaps and bounds. That sector has done very well today, and a couple of reasons why FMCG was abuzz in today's trade. First one is RBI's action coming in that we've seen earlier in the day. The RBI cut its repo rate by 25 bits, bringing it down to 6%, and this is expected to give a fillip or a kick up to consumption on an overall basis. Also, some statements by Governor Malhotra, where he said that the prospects of agri sector remain bright in FY26, and on the back of this, rural demand is also looking good. He also said that there's an uptick that they're seeing in urban demand as well, as the discretionary spends are picking up. So that's also looking good when it comes to the entire consumption sector. On the back of what he said for rural demand, rural facing stocks, the likes of Imami or to some extent Nestle and ITC, as well as HUL, all of these stocks have done very well in today's trading session. The second reason is the monsoon update that we've received last evening from SkyMet, where they've predicted normal monsoon for India this year, and they say that La Nina this time around will be for a very short duration and will not have much of an impact. So this is also looking very good for the harvest of the year on the back of good monsoon coming in. And lastly, let's talk about some quarter 4 updates that we've received so far. Good set of quarter 4 updates coming in from the likes of Godrej Consumer and Marico. Both of them have said that volume and value has started to pick up. On the flip side, from the overall consumption pack, Titan was also good. Trent and Dabur slightly weakish numbers coming in for quarter 4, but nonetheless, all of this has led to the FMCG pack performing very well in today's trade.
All right, moving on from the FMCG pack to the counters that were buzzing away in trade today. For that, my colleague Rabinder is standing by with all the stocks that were in news. Let's go across and take a look. Over to you, Rabinder.
Well, ITI Limited is in focus, where company has emerged as a L1 bidder for BharatNet Phase 3 project in Himachal Pradesh. Moving to next, BPCL were also in focus on back of news where company has signed a joint venture agreement with Sembcorp Green Hydrogen Private Limited in domain of renewable energy and green hydrogen, including its derivative, and the joint venture will be 50-50%. Moving to next, Gujarat Gas were also in focus on back of brokerage note, where Motilal Oswal has come out with a note on Gujarat Gas, and they have maintained a buy rating with target price of rupees 475. They say that the company's long-term volume growth prospectus remain robust with the addition of new industrial units and expansion of existing units. And the company volume to clock approx 6% CAGR during FY24 to 27. Moving to next, Vedanta were also in focus, where as per ET sources, Vedanta is considering to trim its proposed demerger into 4 units from the originally planned 6 and later reduced to 5 after a corporate tribunal blocked the spin-off of its power business Tailwind Sabo Power. And lastly, pharma sector, pharma stocks were also in focus, where Trump again signaled some major tariff on the pharma imports. So because of this, pharma sector were also focused in today's trading session.
Ravinder, thanks for joining us with all of those details about the stocks that were in the spotlight today. But let's talk about one stock that is going to be on everybody's radar come Friday morning, and that's IT Bellwether TCS, because that's all set to start the quarter 4 earnings tomorrow. The IT major is likely to report a muted set of numbers, with BSNL ramp down denting growth. My colleague Ansh is joining us with what the street is expecting and what you should be watching out for when the numbers do come out tomorrow. Ansh, take it away.
TCS is expected to report soft quarter with modest growth. In terms of a dollar, we are seeing that revenue is estimated to be at $7,489 million, which is down by around 0.7% sequentially. Now, the dip is mainly due to ramp down in BSNL deal and fewer working days during the quarter. However, in rupee terms, we are seeing that revenue is expected to rise by around 1.4% to 64,856 crore, whereas EBIT is likely to come in at 16,123 crore, showing a 3% increase sequentially. Also, margin may expand by 40 basis points to 24.9%, and this would be mainly supported by improved operational efficiency and reduced contribution from BSNL deal. Lastly, net profit is projected at 12,650 crore, which is up by around 2.2% on quarter-on-quarter basis.
All right, so that is what we are penciling in as far as the TCS earnings are concerned, which is due on Friday. But with that, it's a wrap on this edition of Your Trade. Snehi and I will take a leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.